Hello, everyone, and happy Financially Lit Tuesday. Back at it again every Tuesday at 6:30 p.m., where I bring you news, tips, and tricks on how to wealth up. And for those of you that are tuned in, be sure to hit the like and subscribe button on the Sipping Wealth YouTube channel so that you don't miss out on any Financially Lit Tuesdays. And then go ahead and make sure that you hit the share button so that your family and friends could go ahead and wealth up with us as well. Because we definitely don't want to keep all this awesome, knowledgeable information to ourselves. We want our friends and family to wealth up with us. So, y'all, today, if you haven't been following us on our social media platforms, you definitely should. You should on Facebook, Instagram, getting on our email list, whatever the case may be, because this is how you're going to make sure that you are up to date on these deadlines coming from the Department of Revenue, the IRS, all these state and federal agencies that you have to report to. So you definitely don't want to fall behind on it so that you can avoid all those penalties, interest, and just like having to do all this extra back handling of old paperwork and things like that. All right, y'all. So, as some of you may know, this Thursday is a huge deadline. These next 2 months, this one and next month are going to be huge deadlines. But this one in particular, we do have the last day to file your S corp and partnership returns. Now, this is for pass-through entities. All right, if you actually filed an extension. Now, this is for those that filed an extension on time, and that had to be back in March. So if you filed that extension in March for your pass-through entity, that's an S corp, that's a partnership return. If you did that, then your deadline to have that filed is literally 2 days from now, Thursday. All right, and then after that, you do have those failure to file penalty and interest, and things that really could have been avoided. All right. So, of course, those of you that are like, oh, cutting it close, you can always file, but you do have those penalties and interest that can come into play. All right. It's also the third quarter of 2022 estimated tax payments. So this can be made on irs.gov. Like literally just head over to the website, irs.gov, make payment, and you can make your estimated tax payments. All right. So you can do it the old school way of mailing it in, but y'all, you could do it from your phone. You could do it from your computer, really quick and easy. No need to mail it in. This makes it very easy, very accessible to go ahead and get that done. Literally within 5 minutes, you can have your estimated tax payments made. The calculations and all that may take a little longer, but the process of actually making the payment is very quick and efficient. All right, y'all. So a lot of people come to my firm and they're aware of quarterly taxes. They're like, oh yeah, I have to do something quarterly having to do with the IRS. Maybe they're like, I don't really know, but I heard taxes are due quarterly. What exactly that it means. And quarterly taxes tend to be a vague term, right? A lot of people just throw it out there. Yeah, quarterly taxes, but there are actually several types of quarterly, quote unquote, taxes that are due, especially when it comes to business owners. We have our business owners, our 1099 contractors, those of you out there. All right, so it can be, for example, I'm going to talk about the main ones. So this is the estimated tax payments, like I've been mentioning, and that's federal, and that's directly to the IRS. It's due April, June, September, and then we have our last one in January. All right, and then we have our Form 941. This is a quarterly payroll tax form. So for those of you that have employees, this form has to be submitted quarterly as well. Now, this is to the IRS and is due April, July, October, and January. So those deadlines are different, but they're two different taxes that still have to be met and paid on time as well. All right, so like I said, this is for W-2, if you have W-2 employees, or if you are an officer of a corporation. All right. So hopefully you do have an awesome payroll provider, payroll processor that is remitting these and filing it on time for you. But for those of you that are processing payroll on your own, you do want to make sure that those forms are submitted. Even if you're going through a third-party payroll processor, you want to verify with them as well that these are being submitted on your behalf. All right. The other one is sales and use tax. So this is with the state. So this is with the state to the Department of Revenue. This is due April, July, October, and January. So like I said before, this is just for quarterly. We do have there is sales and use tax depending on your revenue that you have to pay monthly. So for those of you that are generating more of a tax bill or a sales tax bill because you're doing more taxes, you're collecting a lot more taxes from the consumer, from people purchasing, then you do have to remit those monthly versus quarterly. All right. And then the last one I'm going to touch on is reemployment tax. So this is also to the state, the Department of Revenue, and this is due April, July, October, and January. So for reemployment tax, this is, as it kind of says, for reemployment. So this is like this is for unemployment. All right, this is out of work taxes that kind of have to be paid in case anyone were to file for unemployment through the state. So this is the bucket of money they like take out of to essentially pay for the employee or past and former employee being out of work. All right. All right. And all right, so today I'm going to explain more in depth about the estimated tax payments because like I said, a lot of people, you may have heard of estimated tax payments and not really sure how it applies to you or not really sure what it means. So I want to make sure that I touch on it and kind of shed some light on the differences of them as well. All right. So if there's at any point in time, if there's any confusion about this, make sure that you're dropping a question in the comment section, or you can reach it out to us as Strategic Tax Accountants, and we'll make sure that we assist you with any questions that you have and all that. All right. So your estimated tax payments are directly related to the income, like whether you're a self-employed, it's self-employment income essentially, or if you're a business, if you're a corporation, if you're S Corp, whatever the case may be, but you do have to make quarterly payments based on your net income of the business. Or the net income of you being self-employed. What do I mean by net income? So net income is your bottom line income or your bottom line net profit after expenses. So you have your revenue, your sales that are coming in, your expenses, and then you have your bottom line. Based on that bottom line for the quarter, that is what you're going to be making your estimated tax payment based on. All right. And so if you are a 1099 sole proprietor LLC, sole member LLC, literally, like I said before, no matter what type of business structure you are, or if you're receiving 1099 income as well, you're making estimated tax payments. All right. So essentially, when you have a W-2 employee, they're having federal withholdings withheld from their pay, and they're having Social Security, Medicare withheld as well. So on the self-employment side, you being self-employed, you got to make those payments as well quarterly. So you essentially estimating what your tax bill would have been for that quarter, and you're paying it to the IRS in advance. All right. Now for my corporations and partnerships, depending on whether you're a partnership or a corporation, you're making your estimated tax payments a little differently based on whether you have W-2 employees that estimated tax payments are, self-employment payroll taxes already being taken out of, or if you're considered self-employed within the partnership. If it's a corporation, then you have to make the payments on a different platform. But if you are a corporation, an S Corp, and you're having to make those tax payments, be sure to go ahead and just get an accountant involved or a tax professional involved in that process. It makes it a lot more easier for you versus because you can't go like the normal way through the IRS website, like I mentioned before. All right. So let's say we're talking about 2022 income tax return. All right. So starting in January and it's due in April 15th, generally, if there's no extension. All right. Or if there it's due, essentially 9 out of 10 is due the Monday before, the Monday like after or the April 15th. April 15th fall on a weekday. Okay. All right. So now you're like, hey, I already made my estimated tax payments to my portal. You actually have to make sure that you're mentioning your estimated tax payments on your tax return. So yes, those receipts, you want to make sure that you bring it to your tax filing so that so that you're not overpaying taxes when you go and file your taxes as well. So like your estimated tax payments, you're paying your taxes for in the future, like you're paying your taxes that essentially would be due April 15th in advance. All right. Or if your tax deadline is March 15th because you're a past due entity, you have a past due entity, you're paying it in advance from that deadline, but you still have to make quarterly payments towards it. There is a penalty involved with it. So you do want to make sure that you are making those payments. How do you know if you need to make estimated tax payments? So it is based, like I said, on income. So the IRS says if you expect to owe us more than $1,000 in income taxes, we're gonna need you to make quarterly estimated tax payments. Also, if your withholding and credits cover less than 90% of your tax bill, meaning if the W-2 withholdings that you already had coming out of your W-2 and any tax credits that you may have, if it's not enough to cover 90% of your tax bill, you're still gonna have to make an additional payment to cover the rest. Maybe your W-2 withholding only cover 50% of your tax bill, and you only have your credit. You don't have any credits. You're gonna have to make sure that you make estimated tax payments. And then the other reason is you received an underpayment penalty in your prior tax year. So if you received a penalty in your previous year, tax year, you want to make sure that you're making estimated tax payments because it may come into play again in this year. And it's a good indicator that, hey, you're hitting those numbers where it requires you to make estimated tax payments. So generally, if you're self-employed, a high earner, you have multiple streams of income, you should be making sure that you're tracking your how much money is coming into the business, how much money is going out into the business. If you need to employ a bookkeeping company or strategic tax accountants, of course, then you want to make sure that you do that so that you're staying on top of these deadlines. All right. So estimated tax payments essentially goes like this. You estimate your taxable income, which again is your bottom line. All right. As your bottom line, based on your bottom line, you're going to multiply it by your tax bracket based on the bracket system that comes out every tax year or every time there's an election. So, or if Biden, makes any changes to the tax laws, you include that too. All right, because now we have the Inflation Reform Act that just got passed too, which adds a 15% minimum tax on companies earning more than $1 billion. Interesting. Ooh. But okay. So, for your self-employment tax, you also want to consider, so that's for your income. You have to do your estimated tax payments based on your income, which is your bottom line income. You're multiplying it by your tax bracket. Then you have the second part is your self-employment tax. So this is for my LLCs, my sole proprietors, my 1099 contractors. You want to calculate how much Medicare and Social Security you would have to pay being the employer, your own employer, and your own employee, because you're self-employed. So you have to pay both portions, which is 15.3%, 12.4% for Social Security, and then 2.9% for Medicare tax. So you do have to account for both of those. Yes, 50% of that bill is deductible on your taxes, but you do want to make sure that you're including the self-employment tax payment on your estimated tax payments. All right. After that, you add it up together, and then you go ahead and make that estimated tax payment that quarter. So I know that was a lot. Of course, you can go ahead and rewatch the video. If it's something that you want to make sure that you employ strategic tax accountants for, make sure you do that. Like I always say, taxes, things having to do with the financial side of the business, a lot of points or a lot of parts of the business that you feel like, hey, are not your strong suits. You want to make sure that you employ somebody that's stronger in that side. It's a lot better than you taking it on your own, messing it all up, and then you're like, ugh, now you're receiving letters and it's intense. All right. So make sure that you reach out if you do have any follow-up questions. You can, like I said, you can rewatch the recording on the YouTube channel, Sipping Wealth. There's tons of videos on there, but specifically this video is going to make sure that you have a better idea of the estimated tax payments, the tax payment deadlines that are coming up, and then they will be coming up in the future. This is something that's really not going away at this point, but it does change from time to time as far as how much it is based on who's elected, the president. All right. So I definitely want to make sure that you are up to date with this. Thank you for those that are tuned in. And then if you do have any questions, like I said, be sure to reach out to us at Strategic Tax Accountants, y'all. And also make sure that you are liking us on Facebook, Instagram, and even getting on our email list to stay up to date with these as well. All right, y'all. Cool. If you have any questions, reach out to us. And thank you for tuning in for another episode of Financially Lit Tuesday.